Today, we're going to go through some live mortgage rates, and then we're going to do a deep dive in today's loan topic, which is 90% CLTV DSCR loans. Wow, that's a lot of letters right there. That's a mouthful. But we'll be going over that here in a second. Let us go live on all the different platforms here. Just give us a minute. Go ahead and drop any comments you have there in the chat. We got the chat up on the screen right now, so go ahead and drop a comment there as you tune in. And as we go through the presentation, you can drop any questions you have in the comment section as well. We appreciate everybody tuning in nice and early. See some comments coming in. Appreciate it. Good morning. Good morning. All right. Okay, it looks like we're live on all the different platforms, so we'll go ahead and get started. We'll take the chat off the screen for now, but go ahead and keep dropping comments there. Drop any questions you have in the chat as well, and we'll be sure to answer them as we go through the presentation here today. Welcome, everyone. My name is Kyle Hershey. I am the COO of the Mortgage Calculator, joined here by our president, Nick Hershey, and our sales manager, Jose Gonzalez. We are a lender specializing in non-QM loans. And what we do every morning on this show is go through our live mortgage rates for a few different programs, and then we do a deep dive into a different loan topic each day. Today's topic is going to be 90% CLTV DSCR loans. So our sales manager, Jose, with 28 years of experience, will take us into a deep dive into that loan type. But before we do that, we'll do what we do every morning, which is go ahead and pull up our live rates. So Nick, if you're ready, let's go ahead and pull up the pricing tool, and let's see what the rates are looking like this morning.
All right, let me switch my screen, and we will get into it. All right, so as Kyle mentioned, this is our pricing tool. This will show us the general rates and the APR for today, April 3rd, just after 11 a.m. Eastern. So all of our standard programs are live here. A lot of movement in the markets, so expect to see some volatility here, has been over the last few days. And if you'd like a full loan estimate that breaks down all of the itemized fees that go into the APR, please get with our team members. We have over 300 licensed loan officers here. For the demo today, as we do every day, we'll set up a basic scenario so we can compare across the programs. So we'll set the loan amount to $400,000 here for all the demos. We set the LTV to 80% loan, 20% down payment here. And we'll ask the computer to find the lowest rates we can offer for conforming conventional. And we'll compare that with FHA, which is usually the second option for most borrowers. And then we'll go into our expanded guidelines, also known as non-QM, where we have over 5,000 additional options beyond the standard here. We also offer VA and USDA. VA is only for eligible vets and active service members. If you are, just let us know. We'll quote it, no problem. Same thing with USDA. That's only for eligible properties. If you happen to be looking in those areas, just let us know. We'll start with conforming conventional. We'll do purchase, 30-year fix for all the demos here, primary occupancy, single-family home, 1 unit, state of Florida, county of Miami-Dade. And for all the demos here, we'll use an estimated credit score of 760 and an estimated debt-to-income ratio here of 40%. So with these settings, let's check the basic rates this morning. And about the same as it was yesterday. Should see some movement today, though. 6.49 rate, 2.25 discount points and costs. Put the final APR, 6.756. So good option for our customers using conventional here. And hopefully we see these rates continue to adjust with the markets. If for any reason our customer doesn't qualify for a conventional option, typically the next option we want to explore is an FHA option. So we'll set up the same exact scenario here. Only this time we'll select FHA, which does allow more leniency on credit issues, as well as a much higher debt-to-income ratio. But we'll keep everything identical here for the demo so we can compare across the programs. So FHA options this morning, and again about the same as yesterday, 5.5 rate, 2.5 discount points and costs, put the final APR at 6.441. So good option here for our customers that qualify for both. FHA is actually a touch cheaper at the moment. And our customers that need to use FHA, this APR does include the upfront and yearly mortgage insurance that is required for FHA. And as you can see, it does actually come in at about the same or even less than conventional at the moment. So great option for our borrowers that need to use that. Now, if for any reason our customers don't qualify for conventional or FHA, Many other banks or lenders will have to deny that customer, but that's where we love to present our 5,000 additional options that come up here under expanded guidelines, also known as non-QM. So we'll keep everything identical for all the demos here. All we're going to change is the income type, because our customer doesn't qualify with full documentation income, which is what we use for conventional and FHA. That's 2 years of tax returns. So if our customer doesn't qualify with that, we'll want to take advantage of one of these alternatives. Tons of options here. We have asset-related programs, business bank statement programs. The investor programs are just for investment properties, so we'll show that in a minute. It's going to be a topic today as well. Personal bank statement is the one we use for our demo every day. That's the most popular program, but as you can see, we have a ton of options: RSU, stated income, DOE, 1099, P&L, all kinds of variations here. But this is the most popular. It's 12-month bank statement, and that's for our self-employed borrowers. Many times when our self-employed borrowers submit their taxes, may have various write-offs and may not quite make enough income, or just may not qualify at all. Either way, we can solve the problem. No tax returns at all. We'll just use their last 12 bank statements here and use that to determine a debt-to-income ratio of 40% in our example, using just their cash from the bank statements. So most of our self-employed borrowers qualify for much more income this way and can therefore get that home they really want. And best option at the top here, 7% rate for 2.3 discount points and cost. Put the final APR at 7.398. So good option here for our customers that need to use these bank statement options. It's very comparable to conventional, within about a half a point, as you can see, typical. And as we scroll down here, some of these variations, hundreds of different options, may allow bankruptcies, foreclosures, may allow different ways to calculate the income. So tons of flexibility once we get in here, where we can solve not only income problems, but other problems as well with these non-QM programs. So please get with our team to find the best ones. And for our final pricing demos, we always want to do some pricing for investment properties. So we'll set up the same scenario: 400,000 loan, 80% loan to value, 20% down payment for investment properties. And we'll search for the lowest rates we can offer for conforming conventional and quickly compare that to our expanded guidelines, also known as non-QM. Remember, all the government programs, FHA, VA, USDA, do not work for investments, so we'll just compare these two here. Start with the conforming conventional option. Everything is the same as all our demos. We've only changed to investment here. So let's see the options. A little further apart today than they were yesterday. So as usual, lately with the volatility, the portfolio option is at the top. This option is uses all the same guidelines, all the same qualifications. However, does not actually get sold to Fannie or Freddie, so does not have those loan level price adjustments. So this program comes in at 6.875 for 3.375 discount points at cost. Puts the final APR at 7.277. And conventional rates went up a touch, so the first true conventional option with all the price adjustments is this option, which is Fannie Mae or Freddie Mac, either or. And it comes in at 7% rate for 3.5 discount points. Puts the final APR at 7.419 for the first true conventional option that does have the loan level price adjustments required for investment properties. So a good option for our borrowers that would like to use it full doc, but I definitely recommend all of our investors out there not only check out the portfolio option, which is technically a non-QM option, kind of, but also our true non-QM options, which we always finish off with here. So we'll set up our investment property, set up the same scenario, and this time we'll select expanded guidelines, also known as non-QM. So for investment properties, we have a few options pop up here. So first, we must select our income type. Most popular income type for a non-QM investment, and our most popular loan here is the DSCR option. That's because it doesn't require any income or employment info from our borrowers. We simply use the estimated rental income from the appraisal to determine a DSCR value. It stands for debt service coverage ratio. The estimated rents can cover the expenses, aka the property cash flows. That's a ratio of 1 or higher. We even have options for ratios under 1, where the property may not cash flow, but we always use 1.5 as the demo, so we can see all the programs. And finally, prepayment penalty is standard. We always choose 3 years. That's standard on these programs. There are some options for no prepay, which will cost more and limit the loan programs that pop up. And there are some programs that do allow 5 years, which does save some money, but does limit the programs. We always choose 3 years so we can see all of the most common options pop up here for our live demo. So let's check the DSCR options. Still smoking. So best option today, DSCR 6.875 rate, amazing. 3.275 discount points and cost. It's a final APR at 7.372. Beating conventional, absolutely amazing. 100% of investors, I would say, would take a DSCR option here because of the ease and flexibility, and they can do multiple loans and all kinds of different options. As we scroll down, some of those options here at a little bit higher rates and costs may allow bankruptcies, foreclosures, other credit issues. Some may allow different ways to calculate the income, like short-term rental income, which we did an episode on the other day, so please check that out. And some may allow different property types and extra special versions of these are our topic for today. So let me switch my screen back to today's topic, which is an extra special type of DSCR loans where we do have, I believe it's just one program, but this program is amazing, where we have the option to do 90% CLTV. That means combined loan to value. So not on the first loan. The first mortgage is going to be more of a standard DSCR, but it does allow us to go to 90% CLTV, which means two loans are combining to 90%. So we always do the live demo. We do the standard 20% down, 80% financing, which is standard for DSCR. We have other options a little bit higher for 15% down. You've seen Jose do in past episodes. This is an extra special version that requires a combo of two loans in order to accomplish this 90% CLTV. So I want to first make sure everybody understands that CLTV is different than LTV, but is still an absolutely amazing option. So Jose, if you're ready, let's go ahead and give them any other guidelines here before we check out the actual pricing, if you can.
Good morning, everybody. Thank you for joining us for Daily Mortgage Rates Live with the Mortgage Calculator. This is definitely one of the mind blowers here, right? 90% CLTV DSCR loan, which means your borrower is only going to have to put 10% down. And even better, just letting you know, this program is a true no ratio DSCR where the DSCR does not have to be calculated up to a total loan amount of $500,000. So that further adds to the benefit. Now, how this program is structured is 75% loan to value on the first mortgage. That is the maximum LTV on the first for this particular option. And then a seller held second or any other second that you can actually find that would lend you up to a 90% CLTV on a DSCR loan under a no ratio option. But I don't think there's any other type of second loan out there for that CLTV, but we definitely can structure this if the seller will hold the note for the second 15% LTV for a combined LTV, CLTV of 90%. Now, obviously, this is for purchases only, right? Because if it's a refi, it's a refi. You're going to refi up to 75% because you know there is no seller on a refi. So this is only for purchases. So let me go ahead and share these options with you today. Now, and this is also available for 1 to 4 unit properties. So here we go. And actually with this conduit, I think you could even do this for their 5 to 8 unit properties and their 2 to 8 unit mixed use option properties as well. And remember, it's a no ratio DSCR up to $500,000 loan amount. Minimum loan amount of $75,000 on the first and minimum credit score of 650, and exceptions are granted. We've been able to close with this option down to like a 642, 643 credit score. So we can get exceptions. So here, our first rate options, I'm going to show you multiple rate options. Our first rate option here is for our maximum credit tier of 760 plus, right? So at a 760 plus, our par rate at which no loan discount is needed to buy down the rate. This is a 30-year fully amortizing fixed rate. This is not a 5-year fix. This is not a 25-year amortization. This is not a 5-year term with a 30-year amortization, which is that would be a balloon loan at the end of 5 years. This is a 30-year fully amortizing loan. 9.74%. No loan discount. That's at par. Amazing rate for our 760 plus credit score. So now, if your premium credit score borrower wanted to pay 1 point loan discount, remember this is separate from any loan origination. This is just loan discount, 1% loan discount. The rate drops to 9.365. Now that there is no lower buy down option with this program. 9.365 is the floor there. So even if I wanted to pay 2 or 3 points, it still gives me the same rate. So that is the floor rate for this option. So now showing you a different quote option, different rate option at a 700 to a 719 credit score, just to give you a little bit of context. Our points, again, no loan discount. This is the par rate. But now my interest rate increases by 0.5%. Remember, it was 9.74 at par with the 760 plus credit score. Here at the 700 to 719 credit score, it's 10.24% for our 7 to 719 credit score. Now, if you wanted to structure the quote so that the borrower received a 1 point lender credit, that way using that 1 point to offset the 2.75 broker fee, then you could structure the loan this way, where it increases the rate to 10.74. So to get that 1 point lender credit, the rate increases by 0.5% to get the 1% lender credit. Still good option for 700 to 719 credit score, 10.74 rate with a 1 point lender credit. Pretty cool. So now showing you options at the bottom end of the range, right? 650 is the lowest score at which I can still pull rates without having to call for off-sheet pricing, right? So in this case right here, our par rate, right, no loan discount, is 10.99%. That's a very good option because remember what we're doing here, 90% CLTV, 650 credit score, DSCR purchase. That's a mouthful. 10.99 is our rate at par with our 650 credit score. So now, if the borrower wants to buy down the rate, I'm giving you some rate buy down options. Our first option is paying 1 discount point, and the rate drops from 10.99 to 10.615 is the rate with 1 discount point paid at our lowest credit score option of 650. That is the minimum. And now I have another option for you. This is paying 2 discount points. So borrower says, hey, I'm in it for the long haul. I want to benefit a little bit more here. So 10.24 is the rate for our 30-year fixed, fully amortizing, full-term loan with a cost of 2 discount points. 2 points in loan discount. And actually, that is our last option. I thought I had more options, but every point, you can pay an extra point there, and that would drop it down to like 9. It drops 0.375 for each, 0.3615 for each point. So you would be going down to like 9.99 if you paid another point, but most of our customers usually don't pay more than 2 points.
Okay, thank you, Jose. I do not see any questions here. No questions. So I guess we'll go ahead and wrap it up then. Remember, we do this at 11 a.m. Eastern every weekday where we go through the live rates and then do a deep dive into a different loan topic. So we'll be back tomorrow with a new topic. Thank you, everybody, for tuning in. We'll see you tomorrow, 11 a.m. Eastern, for the next episode of Daily Mortgage Rates Live with the Mortgage Calculator. Have a great day, everyone.